facts, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Pellet. We've got the Dow, the S&P, NASDAQ all advancing right now. 7-point gain for the S&P, up by about 0.2%. Key takeaway, it has been a choppy session today. We've got the Dow up 181, up by about 0.6%. NASDAQ up 15 now, a gain of 0.1%. 10-year yield 3.10%. Spot gold is at $18.18 the ounce, down $2 the ounce, down 0.1%. West Texas Intermediate crude retreating by 1%, 110.70 for a barrel of WTI. Stocks are falling, bonds are rising with the dollar as traders weigh remarks from major central bank chiefs about the outlook for the economy and interest rates. Bed Bath & Beyond shares are plunging after replacing its CEO following a tumultuous year. Sales fell even more than expected in the first quarter. Bed Bath & Beyond shares right now, they are down by 22.8%. Recapping, S&P up 7, up 0.2, 10-year yield 3.10%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much for the update. Carol Master along with Katie Greifeld here on Bloomberg Business Week. We'll talk about an all-star lineup by Bloomberg's Francine Lacroix. She moderated a panel with that lineup, a central banker policy discussion at the ECB Forum in Sintra, Portugal. Fed Chief Jay Powell was there, the head of the ECB, Christine Lagarde, also the Bank of England chief. In this excerpt, Francine asked the Fed's Jay Powell about why slower growth is a trade-off for getting inflation under control. Check it out.
If what we see, for example, is the redivision of the world into competing geopolitical and economic camps and a reversal of globalization, that certainly sounds like lower productivity and lower growth. And in many parts of this side of that, you see aging demographics, so a shrinking workforce, and you see economies that are growing more slowly and whose workforces are not expanding. So that's certainly a possible outcome, and I think probably to some extent a likely outcome.
And in the shorter term, can the economy, can the U.S. economy actually deal with, a possible onslaught of interest rate hikes?
So the U.S. economy is actually in pretty strong shape. So if you look back a year, the U.S. economy grew more than 5.5%. It was really the big reopening year. Mm-hmm. And so we had expected this year to be that growth would moderate to a more sustainable path. We also, of course, are raising interest rates, and the aim of that is to slow growth down so that supply will have a chance to catch up. We hope that growth can still remain positive. But if you look at the strength of the economy, households are in very strong financial shape. They've still got a lot of excess savings from forced saving from not being able to travel and things like that, and also from fiscal transfers. So households are overall, not every household, and not the ones at the lower end of the income spectrum, but overall in strong shape. The same thing is true of businesses. Very, very low rates of default and things like that. Lots of cash on the balance sheet. The labor market is tremendously strong. Still averaging very, very high job growth per month. So overall, the U.S. economy is well positioned to withstand tighter monetary policy, we think.
But is it automatically a trade-off between fighting inflation or taking care of the economy, and how far are you willing to go with interest rate hikes?
So I guess I'd say it this way: our aim is to have growth moderate. It's sort of a necessary adjustment that needs to happen, so that again supply can catch up. It could be supply of workers. It could be time for the supply chains to improve. So the sense of that is that if we can get, right now supply and demand are really out of balance in many parts of the U.S. economy, labor market being a big example of that. We need to get them better in balance so that inflation can come down. And that's the aim of what we're doing. Now, we don't have precision tools. Obviously, monetary policy, famously a blunt tool. That is our aim, that is our intention. We think that there are pathways for us to achieve that, to achieve the path back to 2% inflation, while still sustaining a strong labor market. We believe we can do that. That is our aim. Mm-hmm. There's no guarantee that we can do that. It's obviously something that's going to be quite challenging, and I would also say that the events of the last few months have made it significantly more challenging. Thinking there particularly of the war in Ukraine, which has added tremendously to inflationary pressures around food and energy commodities and agricultural chemicals and industrial chemicals and things like that. So it's gotten harder. The pathways have gotten narrower. nonetheless, that is our aim, and we believe that there are pathways to achieve that.
All right, that, of course, was Fed Chief Jay Powell speaking with Bloomberg's own Francine Lacqua at the ECB Forum on Central Banking going underway today in Sintra, Portugal. You can check out that entire conversation. I highly recommend it. So relevant to so many of our conversations today. You can find that on the Bloomberg terminal and also at Bloomberg.com. Katie, what's interesting to me is Jay Powell continues to talk about confidence, right, for the U.S. economy, that it can withstand these higher rate increases. But I think what's fascinating to me is this. He mentioned it. I think also Andrew Bailey of the UK mentioned that maybe we are going to be in an environment of higher inflation, that will be the norm on the other side of this.
When can we start to talk about stagflation? I know it's a no-no word. I know it's very taboo, but I don't know, persistently high inflation. You heard Powell himself say that slower growth is a necessary condition of the tightening that's going on. I don't know, higher inflation, slower growth, the labor market, I don't know, it seems like a recipe for at least some version of stagflation.
Right, it feels kind of ugly. Like right now, the labor market very strong. We're going to get another read a week from Friday. But you know, how aggressive does the Fed need to be to start to slow down 400,000 jobs a month that we continue to still get? They've got to be pretty aggressive probably for a long time, and you do have to think what an impact that ultimately will have, especially as those Fed moves, right, have a bit of a lag.
Absolutely, yeah. The long lag of monetary policy, it's going to take a while. And that's that sort of in-between period where maybe we do get that sustainably higher inflation. But, I mean, Carol, that's the multi-million, I don't even know what number to assign
Trillion.
it, but how much the Fed needs to go to get this under control, what that means for the economy ultimately, what that trade-off ultimately looks like.
I mean, to me, that it totally explains kind of the trade that we continue to get, right? We had quite a bounce back, and that's because we were so beaten up, right? In terms of, I'm just talking equities. You look a lot of different cross assets. But I think until there's really true clarity about what, you know, post-pandemic life is and maybe confirmation that we don't go back to what pre-pandemic life was, that it's going to be different.
Yeah, and in the meantime, I mean, it feels like markets are hanging on every single data point. It's really wild. I mean, you can see it in the intraday charts, the S&P 500 moving off of those big releases in the morning.
We're going to talk crypto with you in just a moment because there's so many headlines. Is there any correlation between what we're seeing generally in financial markets versus crypto?
Everything down, pretty much.
There's like really no place to hide, it feels like, in crypto.
Yeah.
All right, there are some really shocking headlines, remarkable headlines about the continued sell-off, if you will, among the crypto universe. So we're going to get to that in just a moment. All right, you're listening to Bloomberg Business Week, watching us on YouTube. Carol Master, Katie Greifeld, and this is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yes, indeed. This is Bloomberg Business Week. Carol Massar along with Katie Greifeld here in Bloomberg headquarters in New York City. Good thing, Katie, there's nothing going on with the crypto world.
Absolutely nothing. Unless you look at it at all, there are so many headlines, Carol. It is hard to keep track of. We're going to get there, but before we do, let's go to Charlie Pellet for an update on the trading day.
Hey, thank you very much, Katie. Let us begin with Bitcoin because right now it is hovering right around the 20,000 level. Bitcoin 20,053, down now by 1%. Stocks are trading mixed. The Dow close to session highs, up 161, up by about 0.5%. S&P up 2 points, little changed, up less than 0.1%. Nasdaq swinging between gains and losses, down 3 points now, a drop of less than 0.1%. 10 years up 19.30 seconds, a 10-year yield 3.09%. Spot gold is down $1.50 the ounce to 18.18. Little change, lowered at less than 0.1%. Crude oil, West Texas Intermediate down 1.6%, 109.93 a barrel on WTI. Federal Reserve Chair Jay Powell says the U.S. economy is in strong shape and the central bank can reduce inflation to 2% while maintaining a solid labor market, even though that task has become more challenging in recent months. Powell spoke during a panel discussion in Sintra, Portugal, moderated by our Francine Lacroix. Also appearing was Bank of England Governor Andrew Bailey and ECB President Christine Lagarde.
From our vantage point, we are on a normalization path. We have signaled that very clearly. We've started that back in December. And, you know, the key assessment is the assessment of the medium-term outlook. The variables that we look at, the data that we look at, I think, you know, everyone is aware of that. And most people operate on the basis of the same data, the same information. And I think that our reaction function is what matters.
ECB President Christine Lagarde speaking with our Francine Lacroix. Carnival Corp shares plunging as Morgan Stanley analysts warn that the cruise vacation firm shares could lose all of their value in the event of another demand shock. Right now, Carnival Corp is plunging by 14.6%. Rivals Royal Caribbean down 10.4%. Norwegian Cruise Line Holdings lower now by 9.9%. Recapping, stocks are trading mixed. The Nasdaq lower, down 7, down less than 0.1%. S&P up 1, a gain there of 0.1%, and the Dow up 147, up 0.5. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie, did you make Francine and Christine like kind of one person there?
Yeah, you know what? I feared, as I was saying it, I feared that it wasn't coming out right. But just to be clear, it is Francine Lacroix. I know. Thank you for calling it to my attention. I'm glad it was just me and you that noticed.
Francine wanted to know if she got a promotion all of a sudden. She was going to run the ECB, you know?
Exactly. But
or
she did.
Christine was going to come anchor with us.
Does it get any better than? Does it get any bigger than what she did this
No.
morning? I mean, I was looking at that list of talent there. It was unbelievable.
It's incredible. It's why I say that panel, we ran a piece of it. You've got to go back and listen to it all or watch it all. It's definitely on the Bloomberg. It's really important to so much of what's going on in the global environment right now. So you're perfect, Charlie. It's why I like to call you out every once in a while.
And to defend Charlie a little bit, Francine Lagarde, I mean, it rolls off the tongue. She sounds like a real person, but we could probably talk about this for hours. But Carol, I'm dying.
Maybe there's an NFT of her. Maybe there's an NFT of Francine Lagarde.
Well, unfortunately, if it's an NFT, it's probably gone way down in value.
All right, so what's going on in your world?
Okay, so it's interesting. If you look at the price of Bitcoin, it is almost on the nose on $20,000 a coin. It's been there for, I don't know, a month. It feels like it never moves. But we actually got some pretty huge news from crypto world today. 3 Arrows Capital. So this is a famous crypto hedge fund. It's made a series of wrong way bets. It's now disgraced. And now we know that it's going to liquidate. A British Virgin Islands court finally ordered the liquidation. It's going to work with Teneo to sort of make that process as smooth as possible. There were some hints that this would happen. I mean, if you think about earlier in the week, Voyager Digital, it's a broker, it said that it was going to issue a notice of default to 3 Arrows. It failed to get a repayment on a loan. But we finally got the news today that this is happening. It's being liquidated. And it just really, I think, puts a very tangible illustration of this huge drawdown that we've seen in Bitcoin.
I keep thinking about the headlines that come across, and you've got this one, right? That's such a big one. And then you've got Coinbase, like renewing their overseas expansion plan. That's going on. You've also written a story today about the Grayscale spot Bitcoin ETF coming with a catch. Like, what's that about? Because that, I mean, an ETF would what, make it more, I don't know, available, appealable to the masses?
You know, that's the bull argument that it would open up this new avenue for people to get exposure to Bitcoin. But, you know, the more realistic take maybe is that, I mean, if you want Bitcoin exposure by now, you figured it out. You've found a way to get your exposure through, I don't know, whether it be Coinbase or some of the other exchanges or the derivatives ETF that's out there. But in any case, we do have a big SEC decision coming on July 6th. That's the deadline. This decision could come in the next few days, but it pertains to Grayscale's application to convert its Bitcoin trust into a physically backed ETF. We don't have one of those yet. We only have the derivatives backed one in the US. So it's almost certainly going to be a no, but I mean, Carol, this is something that both the crypto and the ETF industry has been waiting 8 months for.
Well, and Grayscale has been so shy about wanting to do this, right?
Yeah, they've launched a very public and passionate campaign for this conversion for a spot Bitcoin ETF. And I mean, they really want to see this happen because if you look at the Bitcoin trust that they have, it's trading at an enormous discount to the Bitcoin it actually holds because you can't redeem shares. It's not like an ETF. And that matters. So that's really slammed the shareholders, the long-term shareholders who have been riding this out.
All right. So then how do you like then, I mean, there's another headline, MicroStrategy saying it purchased another 10 million in Bitcoin. So they're kind of doubling down here. And some might say, you know, who knows? Time will tell whether that is a smart play, right, going forward. We just don't know. Or whether it could lead to more exposure that could be more trouble.
You know, Carol, to like bring it to your world, Michael Saylor, he almost reminds me of Cathie Wood. He's a true believer. Yep. And I mean, the fact that he's trying to catch the knife here really speaks to that. I mean, I'd love to know who else is buying Bitcoin in size right now. But I mean, he is true blue rather. He's purchased 480 more Bitcoin. We know that MicroStrategy is underwater on their total Bitcoin bet, but still he's adding. So I don't know if anyone else is going to be tempted to follow, or if any other corporations would be tempted to follow. But Michael Saylor, he's out there.
Hey, just 30 seconds here. So how do you think about the narrative when it comes to crypto right now?
You know, I still think if you just look at the prices, it's still a levered bet on tech pretty much. But what's been interesting is that some of the crypto equities that we talk about a lot, they're in the dumps even more so than the coin itself.
Yeah, it's pretty amazing to look at some of the numbers. And just even today, you know, with Bitcoin, down? Well, actually, Ethereum's down a lot more, right? About 5% or so. Binance is down almost 6%. So you continue to see it. We love having you around because you make sense of all of this.
Love to be here.
Katie Greifeld, she's sticking around. We've got lots more to come. You're listening to Bloomberg Business Week. Carol Massar with Katie Greifeld. Right now, it's back to World and National News. It's back to D.C. and Nancy Lyons. Hey, Nance.
Thanks, Carol. The latest testimony about the events surrounding the January 6th attack on the U.S. Capitol has Republican leaders saying it is a political hit job aimed at President Trump, even though they initially refused a role in the investigation. Bloomberg's Irv Chapman has more from Washington.
The hearings have painted a devastating picture, Greg Valliere, political analyst for AGF Investment, suggested in a Bloomberg interview.
June of the year 2022 will be remembered as the month that pretty much finished off Donald Trump. It's not just that he may get indicted. It's not just that he has lost some altitude in the party. More and more of his own supporters are telling poll takers one term's enough.
Valliere stressed that's been the impact on Trump supporters, not just swing voters. In Washington, Irv Chapman, Bloomberg Radio.
The wife of Supreme Court Justice Clarence Thomas is declining the January 6th committee's request for her to testify. A lawyer for Virginia Thomas says there is no sufficient basis for her to appear before the panel. Well, there's a new push to address smuggling at the border following dozens of migrants being found dead in the back of an abandoned tractor trailer on a desolate Texas road. Dr. Brian Everett, Associate Medical Director with San Antonio Fire Department, says they're still struggling to shake what they saw.
I think about what they went through when those doors closed. I think about the risks that they took. I think about people being treated worse than animals.
Again, Dr. Brian Everett, the death toll now up to 53 in what officials are calling the deadliest migrant smuggling incident in U.S. history. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, I'm going to talk old and new here, and I'm going to throw a little bit of a calling an audible, because I do want to also get to the most read story that's on the Bloomberg in the past 60 minutes. But first up, let's get to a story that really plays into what we were just talking about, crypto and NFTs and all those good things. Napster, right? This is the company we know, free music, brought it to, a generation of consumers, planning to rebuild its business around cryptocurrencies and non-fungible tokens, NFTs, even as demand for such assets has slumped. I don't know. Is that the kind of thing that you're like, okay, this is definitely peak?
Yeah, it doesn't seem like a great time. I mean, another well-read story on the terminal today was talking about how OpenSea sales volume has fallen 75% since May, OpenSea being a big NFT marketplace. But, Napster going for it. Of course, this revamp is part of a take-private acquisition by Hivemind Capital Partners. Of course, that is former Citi executive Matt Zhang's crypto venture. So, I mean, they've got some big backing there, but bold strategy.
I guess what they're looking to do is they're launching their own token, so Napster, which music fans can use to buy tickets and experience from artists on its new platform, according to the company's, CEO and others. I guess that's kind of, I don't know, that maybe makes sense.
Yeah, perhaps. I mean, you can see the sketchings of a pitch there, but it is interesting to see that this sort of revamp. It's something that LimeWire attempted themselves, and it should pit Napster against OpenSea, which we were just talking about. That's the biggest NFT marketplace. Of course, again, just expanding into an area that is definitely contracting right now.
Feels like we're all just trying to figure it all out. I did want to mention the most read story on the Bloomberg in the past 60 minutes, and this has the Wall Street veteran of 60 years. We're talking about George Ball saying the S&P 500 will sink to 3,100, that would be a pretty significant drop from here, Katie.
Yeah, there you go. Some just amazing numbers being thrown around.
Yeah, all over the place to some extent. All right, you're listening to Bloomberg Business Week, watching us on YouTube. Carol Master, Katie Greifeld. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
On Bloomberg World Headquarters, I'm Charlie Pellet. Stocks are struggling to find direction. The Dow higher, up 57 now, up by 0.2%. S&P on the minus side, down 10, drop there of 0.3. Nasdaq lower by 42, down 0.3%. 10-year yield 3.10%. Spot gold is down 0.1%, 18.18 the ounce, and crude down 1.9%, 109.61 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, the Bloomberg Business Week annual heist issue, it is out. The cover story takes us from the Cambodian jungles to the Metropolitan Museum of Art. It is about an art crime for the ages. And earlier, I caught up with Matt Campbell, Asia editor for Bloomberg Business Week from Singapore. Matt wrote that story along with Bloomberg Business Week editor Joel Weber. I began by asking Joel about how this story, perfect for the heist issue, came to his attention.
Matt actually wrote this story, and as he'll, I think, reveal here, actually the main character is a character named Douglas Latchford, and Matt had high hopes to actually talk to him at some point, but then obviously COVID happened and he passed away. So what is incredible about the story, though, is that it really speaks to Cambodia and the artifacts at Cambodia, but also the sea change within the art world, where artifacts that were looted decades ago are now in the crosshairs of investigators who are trying to actually return them to their rightful owners. So Matt, talk to us about Douglas Latchford. Who is he exactly?
So Douglas Latchford, the late Douglas Latchford, who died in 2020, was a British businessman who lived virtually his whole adult life in Bangkok. And among other activities, he was, for a period of about 40 years, arguably the top dealer in the world of statues from Cambodia, these spectacular Khmer Empire sculptures, some of them 1,000 years old or more. And he really built an art dealing empire, and there are works in very fancy private collections and huge important museums like the Met and the British Museum with links to Latchford all over the world. But as has now become apparent, he was a part of a looting network and was facilitating essentially the looting and laundering of statues that were being ripped from temples, having their origins obscured, and then trafficked onto the international art market.
So what did that network really look like? Because he actually really never went into the jungle. It wasn't like he was an Indiana Jones character here going into the jungle to get these artifacts, right? So what did his network look like?
That's right, Joel. There has been a perception of Latchford sometimes in the past as kind of a tomb raider himself, and that in fact is not true. He directed this operation, and he did everything that he did essentially from his apartment in Bangkok. But what he did was buy whatever was coming over the border from this network of looters and brokers within Cambodia who knew that Latchford was a buyer. He helped create a huge market for stolen antiquities and certainly had contact with the brokers who were deciding to some extent what got looted and what got out of Cambodia. So while he was not himself smashing and grabbing statues, he was really the essential node in this operation. Without him, and particularly without his very energetic salesmanship, which made these Cambodian statues into really big money objects, selling for high six and even seven-figure prices, this looting would never have occurred on the scale that it did.
And what are the artworks themselves?
So we need to do a little bit of background history here. Cambodia, 1,000 or so years ago, was the center of something called the Khmer Empire, which was this Hindu and Buddhist monarchy encompassing all of contemporary Cambodia as well as much of Thailand and Vietnam, was this very powerful civilization. Angkor was the capital, Angkor Wat being the site a lot of people are familiar with. And these Cambodian kings commissioned massive statues. These are 4 feet tall, 5 feet tall, 600-pound stone objects depicting gods and warriors or themselves, or their wives and children. Really beautiful figures. And actually, when you spend a little time with these objects, as I have, it's very easy to see how you could become obsessed with them, as Douglas Latchford was.
Well, and, take us there, Matt. You went to the Cambodian jungles. Tell us about what you saw and kind of the massive. I mean, some of these. There's some pictures in the magazine. They really are stunning, but they're massive. And take us to also where, who knew that feet would be so key in figuring out this heist, if you will.
Well, so one of the things that strikes you, about visiting temples in Cambodia is, first of all, they are spectacular and they're amazing places, and sort of overwhelming to see in person. But as you look a little more closely, you realize what's not there is that these buildings are empty because there were statues. They used to be full of statues, but the statues are all gone. They were all taken years and years ago. Some were taken under the French, others later, during the Cambodian Civil War and the Khmer Rouge period, and then this really big period of looting, which I described in the story in the 90s, and that was really the golden age of temple robbing in Cambodia. And however, this looting was sort of crude and left behind remnants and fragments, and actually, as you alluded to, feet. And one of the key anecdotes in the story relates to matching a pair of statues that had made it into Western collections to their feet, which were still in situ on the ground, broken off. And of course, it's possible, with computer technology to 3D match these objects together and to determine this statue came from this place. And then if you can interview witnesses, find people who remember it being taken, you can actually nail down the when as well.
When and how did this heist begin to unravel?
So this has been a long and kind of interesting, very interesting process where you've had a number of private citizens, heritage activists, archaeologists, other people involved in antiquities in one way or another who have had suspicions about this trafficking network for over a decade now. But things really began to unravel in the mid-2010s when U.S. prosecutors, specifically in the Southern District of New York, began to take an interest in antiquities trafficking and antiquities trafficking from Cambodia. So there have been a series of indictments now, both federally and at the state level in New York, of people involved in one way or another with the Latchford operation. And in 2019, Latchford himself was indicted on fraud and conspiracy charges by SDNY. And that really signaled that there was this extremely serious law enforcement effort underway. However, Latchford died about a year after that indictment. He was very sick at the time, 88 years old, and never went to trial.
I feel like there are three key players in your story, and we've covered Douglas Latchford. There's the individual who helped him in digging up and, finding the art and getting it out of Cambodia. There was also an internationally connected attorney that the U.S. Department of Justice turned to, Brad Gordon. How important was he in kind of helping figure this all out?
Brad Gordon is a really crucial character in this narrative and is really a remarkable character. He is an American lawyer. He's lived in Asia much of his career. He's lived in Cambodia for over a decade now. And he was hired by the DOJ about 10 years ago to begin investigating some of these thefts on behalf of the U.S. government on the Cambodian side. And Brad really became obsessed by it, totally hooked on the challenge of figuring out where these objects were taken and how they might be returned to Cambodia ultimately. And in that effort, he found a really crucial witness, a Cambodian man named Tuk Tik, who actually Brad referred to with a code name, Lion. And Lion, it turned out, was a master looter, an extremely prolific looter, and someone who helped Brad immeasurably put it all together.
All right, that last voice, Matt Campbell, Asia editor for Bloomberg Business Week. He joined us from Singapore. Morning our time, night his time. It's his story. He wrote it. It's for the annual Heist issue, which comes out every summer. And Katie, it is just a great summer read. Just all these kinds of theft stories, intrigue, and Matt tells a tale like no other. And I'm just waiting for this story to be on Netflix or Hulu or, one of the streaming channels because it's pretty incredible. All right, you're listening to Bloomberg Radio.
Welcome to The Close, Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is Countdown to the Close, just 60 minutes left in the trading session. Caroline Hyde, Romain Bostic, Taylor Riggs, joined now by colleagues Carol Master, Katie Greifeld, in for Tim Stanovic. We, of course, as always, go through TV, radio, YouTube audiences to bring you pretty lackluster day in terms of trading, Carol. We're off by, what, 0.2% on the S&P?
Yeah, no real direction, it feels like, in those major equity averages. If you're looking for direction, check out those cruise line stocks. I'm just pulling up yeah, right? Like, not so good. S&P 500 has an index, tracks leisure, hotels, resorts, cruise lines. That index is down almost 3% in today's trade. A lot of it is because of the cruise line names. Carnival in particular is down about 14%. And this is because Morgan Stanley analysts are coming out and they are warning that Carnival shares are at risk of going to zero if they face another demand shock. So Carnival's down a lot. Norwegian and Royal Carib each down about 9 or 10%. So that whole sector, Katie, getting decimated.
So there are some moves if you look at the sector level, but I don't know. I look at the broad indexes. Doesn't feel like any sort of real action. It's probably no surprise that if you look at trading volume on a day like today, almost 9% below the 20-day average for the S&P 500. No real direction or enthusiasm.
Unless you're looking at the NASDAQ, where apparently we're seeing, what, 20% higher in terms of volume on the NASDAQ, but it's lower by 0.3% if you're looking at the actual numbers. Katie, down 31 points. We're at 11,149, but you're right, lower volumes in the S&P. We're off by 0.2%. The Dow seeing low volumes as well, off by 20% from your average, but we're actually higher on the Dow Jones Industrial Average, but only 0.2% higher. The Russell 2000 really feeling the pain today. Small caps off by almost 1.5%, Taylor.
You really see a reversal of what we had yesterday, Caroline, when you take a look at the individual sectors here within the S&P, and similar theme when you talk about the decline in the Russell here. Energy rolling over, real estate rolling over, materials rolling over. Those are the worst sectors. But Romain, finally, technology, I guess you could call it unch, but it's a little bit there in the green. And then you have the consumer staples in there as well as we continue to talk about the inflationary story underway.
Well, let's talk a little bit about that. Yeah, some of the tech stocks are higher. Amazon, if you want to call it a tech stock, is up about 1%. But it's really those consumer staples names. And I was actually going through, given that we're almost at month end, quarter end, and the end of the first half of the year here, there are only 50 stocks in the S&P 500 right now that are higher on a month-to-date basis, and almost all of them are in pretty much that consumer staples sector, or at least some type of defensive sector. So it's your Campbell's Soups, your Dollar Trees, Domino's Pizza, JM Smuckers, AutoZone, United Health, Zoetis, all of those types of names. That's what's been bid in the month of June. If you pull it back and you look on a quarterly basis, it's the same names, same number of companies. You pull it back on a year-to-date basis, the number of companies expands a little bit, but the additions, it's all energy companies. That's what's getting bid here, and that's really the concern right now as we head into the second half of the year. Universal Display down about 7% after Bank of America raised some issues about basically demand for PCs, televisions, and saying that this could actually hurt the company. And then FedEx, the new CEO there, Raj Subramaniam, actually came out here and kind of laid out his grand vision for the company, gave a lot of financial metrics that investors could hang their hat on, and well, they didn't really like what they heard. Those shares down 2.6%.
And all of this is, of course, as we worry how hard, how fast we're going to push on the brakes in terms of the Federal Reserve, in terms of raising rates and tackling inflation, but potentially eyeing a recession. And I know we're going to talk about the global monetary policy perspective we got today, Carol. Look at these overall charts for our radio audience. I'm looking at not just the Federal Reserve clearly showing higher rates towards the end of the year, but closely behind them, we've got the Bank of England also looking very hawkish. The ECB finally going to be closing off the stimulus taps. And really, this is a global story of inflation, as Taylor was telling us with the Spanish numbers out today.
Right, and that was certainly talked about earlier on an incredible panel that was moderated by our own Bloomberg, Francine Lacroix. We're talking about the ECB head, Christine Lagarde, Jay Powell, of course, of the Fed, Andrew Bailey of the Bank of England, governor there. And they did talk about, certainly Jay Powell, that he thinks the U.S. economy can deal with a much more aggressive Fed in terms of raising rates. He also did talk about a soft landing with Francine. He said, yeah, it's possible. It's not going to be easy, though.
The path back to 2% inflation while still sustaining a strong labor market, we believe we can do that. That is our aim. Mm-hmm. There's no guarantee that we can do that. It's obviously something that's going to be quite challenging, and I would also say that the events of the last few months have made it significantly more challenging.
Okay, of course, that's Fed Chief Jay Powell there on that panel in Portugal, moderated by our Francine Lacroix. So, Katie, I do wonder, I think about the data points, the first quarter data that we got. It's looking backwards, but it showed that consumers, in terms of spending, really was revised down sharply. Is that the kind of soft landing that we're thinking about?
It's some kind of landing, whether it's soft or not. I don't think anyone can really say with any confidence. I am super excited to sort of pair that data with the PCE data that we're going to get tomorrow, because, guys, I've been looking at break-evens, 5-year break-evens, for example, at the lowest level this year. So at least some of the Fed's messaging is starting to come across, at least in the bond market.
Yeah, it's certainly starting to come across in the bond market. And you talk about demand. I was looking at some of those gasoline demand figures here in the United States, which on a 4-week moving average basis dropping down. And remember, this is at a time of the year when that should be going up here. Traditionally, at least here in the United States, most people are hopping in their cars for road trips up to Boston for the Boston Pops 4th of July Spectacular.
Are you driving?
I'm taking the Amtrak. I'm doing a whistle-stop store.
Oh, come on. You're on the Bloomberg jet. Let's just be real here.
I'm on the Bloomberg bullet train from Penn Station all the way up there to Boston, Back Bay. I'm going to be stopping off at every little stop, every little town here, handing out flags.
Look
for me.
It's going to be a Remain spectacular with Kaylee Lines as well. I'm sure doling out the old flag too.
Oh yeah, she'll be there too.
But maybe this is the buyer's strike that we're starting to see. I mean, it might be said that train tickets are particularly expensive as well, but you are seeing gasoline prices to such an extent that people are no longer going to be footing the bill for that. We're starting to see that creep into, you mentioned, of course, earlier, the Carnival cruises, the worries that we're going to get buyer's strike when it comes to going out and enjoying ourselves, and we start to see people backing away from, well, certainly Bed Bath & Beyond, really a spiraling issue, even pre-COVID.
And I think what's so interesting is we came into this thinking that there wasn't quite a buyer's strike, and that was the problem that Chair Jay Powell spoke to, that he's actually trying to slow down demand to give this supply chain a chance to catch up. But I do wonder if that narrative has changed. Nike, of course, was one of the few that we heard from, starting to see a little bit of a slowdown in that North American sector, which had really been holding them up.
I'm so interested to see kind of what this earnings season is going to hold, not just with the numbers, but really the commentary here. Because when you talk about all the issues with inventories, of course, all the concerns about spending and the supply chains here, you sort of wonder what's possible here? What's possible in terms of margins? What's possible in terms of growth?
And think about what we got from Nike, for example. I know that was even more backward looking than some of the reports we're going to get, but wasn't too pretty when you think about China for particular. I mean, that is such a huge question mark looming over a lot of these companies we're going to start hearing from.
And President Xi recommitting to, COVID zero policy. So that is certainly front and center for him. All right, we're going to continue this conversation. That does it for now. We'll be back at 4 p.m. Wall Street time on radio, TV, and YouTube. Beyond the Bell, we will count you down to the market close on this Wednesday.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Carol Masser and actually Katie Greifeld in for Tim on this Wednesday. I think the tough thing is in for financial markets, Katie, is like how much of the pullback, if we just look at the equity markets or even commodity market, how much of any kind of pullback is already factoring what's to come 6 to 8 months? Like what kind of slowdown is being factored in? Are these recessionary numbers that are factored into the trade, or we're not quite there yet? And that's the uncertainty. If for some reason we do have that soft landing, you could potentially maybe start to see maybe the equity markets and other asset classes kind of bottom out, at least in terms of worst performance.
It's something I've been thinking about more and more as we talk about what's priced into the market. Is it a recession? And to your point that the market is a forward-looking animal.
Right.
I mean, we could end up in a situation if the recession truly comes 12 months from now where stocks are actually rallying while we're in a recession because it's already pricing in the rebound.
Because it does feel like sentiment increasingly is getting negative, right? And people kind of running for the hills in terms of where they want to be or where they don't want to be. I don't know. I still feel like, though, it's a lot of uncertainty out there, and that's why it's kind of tricky.
Not seeing it really reflected if you look at things like the VIX, but if you look at bond volatility.
Do you like the VIX? Do you trust the VIX?
I like the VIX. There was a great story actually from Lu Wang that people aren't using traders aren't using options as much to hedge their bets. They're going to futures because futures are in a less expensive way to hedge. And perhaps that's why we haven't seen the VIX reflect some of the just really choppy action we've been getting in markets. It's felt totally disconnected.
I mean, we're below 30, if that's the metric that you use at this point. But I don't know. I'm always confused about this index. I feel like it moves around a lot, understandably, but I just don't know what it tells us about kind of where we go from here.
Existential question.
All right, let's get back to world and national news. Back to Nancy Lyons in D.C. Hey, Nance.
Thanks, Carol. NATO leaders have released a major strategic overhaul of the alliance for the first time, mentioning China as a source of systemic competition. The defense minister of Latvia, which borders Russia, tells Bloomberg News countries like India and China need to step up in the face of Russia's invasion of Ukraine.
Such countries as India and China, they're big countries, they're respectable countries, but if they want to be also leaders of the world, they must develop empathy and develop empathy now.
Latvian Defense Minister Artis Pabriks. The new doctrine formulated this week will replace the 12-year-old strategic concept that described Russia as a strategic partner and did not even mention China. Lev Parnas has been given a 20-month prison sentence. He's a former associate of Rudy Giuliani, who helped dig up political dirt on Joe Biden in Ukraine before the 2020 presidential election. He was convicted of funneling Russian money into U.S. elections. As for yesterday's testimony from White House aide Cassidy Hutchinson before the January 6th House Committee, former SDNY Assistant U.S. Attorney Ellie Honig tells Bloomberg it was the first time former President Trump was linked to the violence.
Right before Donald Trump took the stage to make his speech on the ellipse, his speech where he says we're going to go down to the Capitol and show strength and fight like hell, he acknowledged that he knew the crowd was armed, had weapons, and he said, take down the mags, the metal detectors, because they're not here to hurt me. So that shows Donald Trump knew that crowd that he pointed towards the Capitol was armed and was there for him.
L.A. Honig, now special counsel with Lowenstein Sandler. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Carol Master along with Katie Greifeld here on Bloomberg Business Week. And just want to mention a headline crossing. This is coming from the AP, a news alert. R. Kelly, who used music superstardom to subject young fans to systemic sexual abuse, sentenced to 30 years in prison. So again, we know it's been underway and now facing, it looks like, a pretty long time potentially in prison.
Did you see the documentary?
I did not.
Oh,
Tell me about it.
It was fantastic.
Why?
It interviewed so many of the victims. Yeah. It was really startling to hear.
You know, I think about when we look back at this time, like this last 10 years or so, or 12 years between financial crisis, inequalities, George Floyd, the pandemic, and then also just about people in positions of celebrities or power, and the amount of abuse and harassment that went on.
Getting this news about R. Kelly, I mean, the day after the Ghislaine Maxwell sentencing, pretty interesting.
Yeah, absolutely. But, this stuff has gone on, right? Probably for decades, and finally it feels like victims are certainly getting their day in court.
There's some good happening.
All right, I have no easy segue from R. Kelly to talking about these next two things, but it has to do with kind of our alt energy world. This first story, polysilicon prices jumping by the most in 8 months. This is, of course, used in solar products, with maintenance scheduled at key facilities threatening to raise the cost of solar panels as clean energy demand source. This is part of, Katie, what I think the bigger picture of where we are is, I keep using it, Tim knows I use it all the time, recalibration. This is where our world is right now, and this is why supply chains, pricing, things are uncomfortable.
Yeah, everything physical, it feels like, is in such short supply. I mean, everything, it feels like the cost of everything has gone up. And polysilicon is one of them. That is the average cost of the most expensive grade of polysilicon used to make those solar panels. It rose to 286 yuan a kilogram.
Well, there you go. There you have it. All right. Interesting story. Lots more to come. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Lots of twists and turns in a market that is struggling to find direction. The Dow higher, S&P, NASDAQ both lower. Lots going on. Let's get right over to the first word breaking news desk for today's afternoon call. And here is Bill Maloney.
And good afternoon, Charlie. U.S. stocks mixed in a choppy tape today. The Dow's currently up 110 points. S&Ps are a little changed. NASDAQ is still lower by 8. The U.S. 10-year yield at 3.09%. Gold is down 2. Oil is in the red. And Bitcoin is down by 1.1%. Among the main 11 S&P sectors, healthcare, staples, and tech were in the green. Energy was under pressure. And leaders to the upside in the Dow, McDonald's, Goldman Sachs, and Apple, while Caterpillar and American Express led to the downside. After earnings, Bed Bath & Beyond fell 24%. And in other news, FedEx dropped during their investor and analyst day as key targets lagged. Wrapping things up, Smart Global reports after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney, and to hear live breaking news over your Bloomberg-type squawk, SQUAWK on your terminal. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much for the update. Charlie talking about the overall market trade, singling out some names. Tesla, also on our radar. It's down about 1.8% in today's session, definitely off its lows of the day. And we want to get to a story that is courtesy of our own Bloomberg's Ed Ludlow and Dana Hall, a Bloomberg exclusive, talking about the company's plans to cut about 200 autopilot workers as it shuts down its California site. Let's get more Bloomberg News West Coast correspondent Ed Ludlow. He is in our 960 studio in San Francisco. Check him out on YouTube as we speak. You can see him. Hi, Ed. Hey, so tell us about this story. You guys broke it. What do we need to know? And was it a surprise?
Yes and no. There's a facility in San Mateo here in the Bay Area, and it was home to the autopilot data labeling team. And sources tell us that they were all called into a room yesterday and told that their jobs were gone. That this was part of a longer-term plan to move this team from one facility in San Mateo to one down the road in Palo Alto. Lots of those workers were expecting to be moved, but ultimately what happened was they were laid off.
Ed, I think you're actually at a port and that's a ship coming in.
Yes.
Is that what's going on?
It is, yeah.
So, Ed, I mean, when I saw this headline cross yesterday, usually you would see a headline like this and be like, oh, man, the company is in trouble or in some sort of stress that we didn't know about. Is that true in Tesla's case?
So, Elon Musk told our editor-in-chief, John Micklethwait, last week that Tesla would be laying off 10% of salaried workers. Tesla's workforce is split between 2/3 hourly workers and 1/3 salaried. This is important because, according to sources, the vast majority of those laid off yesterday were hourly, not salaried. So it's kind of at odds what happened, because Elon Musk told us cuts would focus on salaried employees, hourly workers would be protected. Now, Elon Musk also clarified that a lot of the hourly jobs he was talking about growing would be on production lines. The people we're talking about are data labelers. They're working on the autopilot functionality, but they're still hourly workers. So it was a surprise because we were led to believe that those types of employment contracts were protected.
So is this a shift of a mega growth company, it feels like, as it's ramped up and been spitting out its vehicles? I mean, is that a shift from this company maybe not being such a big growth player, but still producing a lot?
Autopilot data labeling is kind of a manual job and a thankless job. You basically take video footage that's generated from the cameras on Tesla customer cars, Tesla owner cars, and you annotate to help train the neural networks that improve the technology. People are doing that here in the Bay Area, but they're also doing it in Buffalo, New York. And what sources tell us is that actually that team is growing in Buffalo, New York. But sources also tell us that they are paid less in New York State than they are here in the Bay Area. So that's one factor to consider. But it's definitely one of these areas that Elon Musk has referred to where they grew too quickly to too great a size. You know, they're big teams. In the Bay Area, as I said, this was part of a sort of change of plan to move people to different offices. They've been winding down the team anyway, but it's still interesting.
Well, that's kind of what I was thinking, because it caught my eye in your story that you say that the company, now based in Austin, Texas, it's grown to about 100,000 employees globally. I had no idea that Tesla employed that many people. And if you think about what we've heard from Amazon, and I think Walmart too, coming out and saying that they overstaffed, I mean, could that potentially be true in Tesla's case?
You know, I think what we learned with inflation is inflation took us by surprise. It surprised to the upside a lot. The macro picture and the supply chain breakdown continues to surprise us, and inventories of retailers is a good example of that. What I would say is that people have short memories when it comes to Tesla, and you have to remember that there have been rounds of job cuts before. You know, the stock performed astronomically in the 2018-19 and the early days of the pandemic, but in 2018 they did go through a round of layoffs when things were tough. So we've seen Elon Musk be prepared to do this in the past, and he'd warned us.
Hey, you know, one thing I wanted to ask you, Katie and I were just kicking around some stories in the solar world and the alternative energy world. There's a story by Tara Patel about Stellantis. It's one of Europe's biggest automakers, and they are warning of a car market collapse if EVs don't get cheaper. I have to say, that makes sense to me, that unless we bring down the price, and I don't know how we do it, whether it's just, you know, being able to mass produce more. I mean, how do you see it, and how does kind of Tesla play into this, who has been also trying to, I feel like, be more aggressive about getting a car for the mass market?
Yeah, you have to remember, Elon Musk had this original goal of a $25,000 EV where he wanted to make one for the masses. Well, that's gone out the window, frankly. He's abandoned that idea. And not every, if we take the United States as an example, the median household cannot afford a $40,000, $50,000, $60,000, $70,000 vehicle, especially a small one like a Tesla Model 3 or Model Y. They look for value. And you look across the market and the trend that we're seeing, all of these EV players, the Rivians, the Lucids, on top of Tesla, and the legacy auto like GM and Ford, it's very expensive high-end models they're offering. We don't yet have a true mass market model that is affordable for that median to lower income family household. And, you know, that's the inflection point. You look at China, where EV adoption's further ahead, they have a greater variety of model types and at more affordable prices than we have here in the United States. In Europe, again, more option, lower price point.
All right, so look into your crystal ball. What's going to be the next story on Elon Musk? Is it going to be Tesla? Is it going to be Twitter? What? Just quickly.
Yeah, you know, Elon Musk has not tweeted since June 21st. I want to know why. I feel something's coming, guys. I feel something's coming.
Elon, are you out there? You can just tweet at Ed directly.
Come on.
Yeah.
Come on Bloomberg Air while you're at it.
Yeah, exactly. Come join us. Ed Ludlow, thank you so much as always. Great scoop. West Coast correspondent at Bloomberg News in our 960 studio in San Francisco. You can hear him on Bloomberg Radio and see him on YouTube. Katie and I come back in just a moment right here on Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, Katie, what do you like to eat for 4th of July?
Oh, man. Unfortunately, not shrimp or pork tacos.
Which is going to be the way you save money this 4th of July. We'll explain why in just a moment. We've got a great guest who follows the ag tech world, and we'll get to her in just a moment. First up, though, back to your top business stories. A look at that trading day. 29 minutes to go, Charlie.
Indeed. All of a sudden, we've got green on the screen, Carol, with the S&P up now by 2 points, higher by less than 0.1%. It's been a choppy session. Stocks have been meandering, struggling to find direction. The Dow up 117 right now, a gain there of 0.4%. Dow and NASDAQ Composite Index up 6 now, higher by about 0.1%. Right now, we have got the Bitcoin moving lower, 20,109 right now, down 0.7%. 10-year yield 3.09%. Spot gold down 0.1%, 18.18 the ounce, while West Texas Intermediate crude is down 2%, 109.49 a barrel on West Texas Intermediate crude. The heads of the Fed, ECB, and the Bank of England are weighing in on monetary policy and inflation, and they spoke today on a panel with Bloomberg's Francine Lacqua. And let's get more from Francine in this report now from Sintra, Portugal.
Fed Chair Jerome Powell says the U.S. economy is in strong shape and the central bank can reduce inflation to 2% while maintaining a solid labor market. But that task has become more challenging in recent months. He spoke on a panel with the ECB President, Christine Lagarde, and the Bank of England Governor, Andrew Bailey.
We also, of course, are raising interest rates, and the aim of that is to slow growth down so that supply will have a chance to catch up. We hope that growth can still remain positive.
All three central banks are trying to lower inflation, which has become a global problem. In Sintra, I'm Francine Lacqua, Bloomberg Radio.
Peloton Interactive shares declining as UBS cautions on user trends. Peloton down now by 5.5%. MicroStrategy said it acquired about 480 Bitcoin, valued at around $10 million in May and June. Average purchase price around $20,817. MicroStrategy shares, they're down now by 4.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, July 4th holiday just around the bend. So we're talking hot dogs, hamburgers, we're talking fried chicken, shrimp macaroni salad. That's what my mom used to make when we were growing up, and we had 4th of July. We're going to eat probably some different things, Katie, but safe to say that we're all going to probably pay a bunch more for it. So let's get to it and see what our next guest has to say about that. Carol Flynn is ag tech analyst at Wells Fargo. She joins us on the phone in California. And Carol, it's good to have you here with Katie and myself. So tell us a little bit about the pain points that we're going to face this 4th of July when it comes to what we eat.
Well, thank you so much for having me. Look, it's absolutely a pain point. Food price inflation is hitting everybody's wallets. And we wrote this research just to figure out where that pinch of inflation could be potentially solved by finding relative value and more palatable price points.
And so walk us through some of those relative value plays. I feel like I'm talking about stocks here, but when it comes to food in particular, I mean, what are the substitutions that one could make if they are trying to host a party and not, pay a fortune for it?
Well, that's a great question. It's year over year in food price acceleration that we're looking at here, and the substitutions are truly going to be things like what else can we put on our grill. It looks like brisket is going to be more affordable than tri-tip this time. Maybe if you're going to stick with the hamburger patties, take a look in the frozen foods section. Anything that's sort of had shelf stability or frozen foods versus perishable. You're going to see some specials out there and some loss leaders. It's going to take a little more effort to make sure this is the food price, the budget is taken care of.
All right, Carol, Katie's already weighed in. She goes, I'm not going to eat shrimp and pork tacos.
I heard that. There are so many bargains in the produce department, and you don't have to have that. That's the beauty of the American food and agricultural system. I mean, we have an incredible diversity of foods available.
But
to
are
us.
shrimp tacos actually cheaper this time around?
The reason we brought up shrimp is actually shrimp prices have not increased over the last 5 years. But you look at the other proteins on the grill, and they're looking at 12 to 15% year-over-year increases. So again, all about relative value. So we'll see the shoppers looking for relative value. If shrimp was already on your grill, you may have more of it this time. If there's something else that you like, then you're going to be maybe looking for substitutions in the frozen food case or some new innovative menu items.
Katie, do you like shrimp?
No, I don't. I was going to say shrimp prices probably haven't gone up because it's a weird food.
It's not a weird food. It's a great food.
Weird texture.
All right, moving
not
on.
a fan. But in any case, I also want to talk about alcohol because personally, I don't really like beer. I'm more of a white wine gal. But a lot of people drink beer and other beverages at the 4th of July. What's the outlook there?
It does look like some of the higher-priced beverages in the beer case are up 20-25%, and we're already seeing demand flow to the domestic super premium brands. So people are already making a change, and the white wine, and especially chilled white wine, is still out there. And there's some great, amazing brands that are at lower price points if you're still looking to fill, to pair with a really nice wine.
Well, that's
so
good.
You're going to be okay.
Okay.
All right, so talk to me, too, about veggies or things like avocados, which we know have been expensive. We've talked about shortages, I feel like, over the last year or so. Where are we on that?
Well, avocado shortages is another story altogether. Mostly supply chain. There's always a perishability issue and weather-driven issues. But California avocados are just about to come into the peak of the season. So look for in your produce department, again, seasonality is going to drive a lot. When there's higher supply, you're going to see prices get moderated. And things move quickly. It's a very dynamic space in the produce section. So talk about sort of weird textures. People talk about that with avocados, but once you are a fan, it's usually a lifetime issue.
So are you saying they're expensive, but they're around?
No, I actually think the price is going to come down because we're going to have better supplies because we're coming into the California season.
Katie, do you like avocados?
Actually, I eat an avocado every single morning. Half of one, not an entire avocado. Let the record show.
It's so healthy for you. So healthy. I'm glad to hear it.
Carol, we only have about 30 seconds left, but we've covered the main course. We've covered beverages. What about dessert? What's the outlook there?
Well, I think you might want to look at some of the non-dairy alternatives. I am a big fan of the real milk people, so don't forget the real ice cream. But it does look like those prices are going to be up substantially.
I like a hot fudge sundae on my July 4th. I'm just going to say it. And a little bit of watermelon as well. All right, we got to run. Have a great holiday, a safe holiday. Carol Flynn, she's ag tech analyst over at Wells Fargo, joining us on the phone in California. All right, folks, we've got just about 20 minutes left in today's trading session. Been quite a volatile, I have to say. My Twitter survey of how we're going to end, it's almost like an even split between gains and losses or no clue. So we'll see where we end up. All right, right now, back to World and National News and Nancy Lyons in D.C. Hey, Nance.
Thanks, Carol. NATO has declared Russia the most significant and direct threat to its members' peace and security. The 30-nation alliance released that statement today at its summit in Madrid. President Biden says the U.S. will set up a permanent base in Poland. We learn more from Bloomberg's Anne-Marie Hordern, who's traveling with the president.
They're also going to be adding additional rotations of thousands of troops in Romania, so they're really bolstering their employment, especially amongst the Baltic states.
And Bloomberg's Anne-Marie Hordern reports NATO is formally inviting Sweden and Finland to join the alliance after Turkey dropped its objections. Dr. Anthony Fauci says he has suffered a rebound of COVID symptoms after taking Pfizer's antiviral pill, Paxlovid.
Speaking at Foreign Policy Magazine's Global Health Forum, Dr. Fauci says he tested negative 3 days in a row after finishing his Paxlovid course. On the fourth day, he says, he turned positive again. Dozens of patients have reported experiencing COVID rebound or Paxlovid rebound. Pfizer CEO Albert Bourla has said doctors could prescribe a second course of Paxlovid if it happens, but U.S. drug regulators have said there's no evidence it would help. Dr. Fauci says he's on a second course now, and while he's still enduring symptoms, he says he feels reasonably good. In Washington, I'm Nathan Hager, Bloomberg Radio.
Senate Democrats are working on cutting the tax increases in President Biden's economic package. It's said to be part of a bid to make a deal with Senator Joe Manchin and get it passed in the coming weeks. The changes under consideration would trim some tax measures passed by the House last year. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Carol Massar, along with Katie Greifeld. She's in for Tim Stenovic on this Wednesday. And Katie, we've got about 19 minutes left in today's trading session. We've been bouncing around right now. A slight gain on the Dow, just down about 6 points on the S&P. NASDAQ down about 22. So we're definitely off our lows of the session. But I have to say, when markets are moving around, what I really love to get an idea of is fund flows. And we've got a great story that taps into this.
We've got a great story because Bloomberg Terminal has some great data on ETF flows, a really great way to measure sentiment. So this is really interesting. They crunched the numbers. So there's been 5% bounces, 5% bounces that have failed to endure in the S&P 500 this year. Each time that's lured billions of dollars worth of buying. Not this time, though. Actually, you saw roughly $10 billion pulled out of equity funds as the S&P 500 jumped more than 6% through Friday from its 2022 bottom.
All right, so this is what we know, right? The narrative, right? When the stock market is pulled back, people are like, okay, it's a buying opportunity. And so they've plowed back into ETFs, and they've done that, as you said, 3 times around. And now, in terms of the rally we saw last week, what they basically did was pull money out, right, and say, I'm going to basically, tuck away some gains after what's been a really difficult year for the equity markets.
And I know, who knows how this ends up. Maybe this is the capitulation that we've been waiting for, that this has finally been exhausted. There's some other interesting stats in this story. Hedge funds tracked by Morgan Stanley slashed their equity exposure to the lowest level since 2009 at a point in the last 2 weeks.
And so much of this, I love there's a quote in this story. Dave Donabedian, Chief Investment Officer of CIBC Private Wealth Management, he said, buy the dips is a good strategy when the Fed is easing and injecting liquidity into the markets. I mean, this is what we have to realize. Liquidity is coming out of the markets.
Yes, it's such a good point that the reason buy the dip works is because you have the Fed backstopping everything no longer.
We're going to get another take on ETF and flows. Stephanie Pierce of Dreyfus Mellon, she's going to join us in just a moment as we go down to the close. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Stocks are seesawing in thin trading. We have got the Dow higher, the S&P, NASDAQ, they are both lower right now. Stocks are struggling to find direction. Traders, though, are assessing comments from central bank chiefs about the outlook for the economy and interest rates. S&P down 7, a drop of 0.2%. The Dow up 48, up by about 0.2%. NASDAQ down 22, a drop there of 0.2%. 10 years up 21.30 seconds. 10-year yield 3.09%. Spot gold down $1 the ounce to $18.18, down by about 0.1%. West Texas Intermediate crude down 2%, 109.52 a barrel. Rough seas today for cruise stocks. Carnival shares are plunging as Morgan Stanley analysts warn that the cruise vacation firm shares could lose all their value in the event of another demand shock. Carnival Corp down 14.3%. Rival Royal Caribbean down 10.9%, and Norwegian lower now by 9.6%. And that's a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, just about 11 minutes left in today's trading session. We have been bouncing around. Slight gain on the Dow, as you just heard from Charlie. A little bit lower on both the NASDAQ and the S&P. So off our highs and lows of the session. Talk about searching for direction. So let's get to it. Delighted to have with us Stephanie Pierce. She's CEO of Dreyfus Mellon and ETFs for BNY Mellon Investment Management. She is in our Bloomberg Interactive Broker studio with Katie, and she and I were in Dallas at BNY Mellon Pershing Insight 2022. We talked about a lot of things, including the future of money, which we'll get to in just a moment. But Stephanie, so great to have you. How are you?
Great to see you. It feels like it was just a week or two ago that we were on stage together.
Yeah, it was just I felt like it was so forward thinking about, kind of our discussions. But let's be present right now. And as we look at this market, we talked about volatility in that panel. We continue to see it here in the market environment. What are you seeing in terms of fund flows that tells you about what investors are thinking about right now?
Carol, it's really powerful to see the fund flows in ETFs this year. What I think it tells you is markets go up or down, but ETFs are still the vehicle of choice for investors. As of the kind of May month end, we were almost 260 billion in ETF net inflows year to date. And that just tells you that that's only going in one direction.
And I mean, beyond that, beyond the inflows, year-to-date inflows that you are seeing, I mean, what are the trends within those flows? Because it feels like it's pretty broken apart.
Well, it's interesting. Surprisingly, with all the volatility in equities that Carol mentioned, we're still seeing very significant flows into equity ETFs. That was about 94 billion of the 260 billion. And within that, there's definitely some more defensive trends, right? So you're seeing healthcare ETFs take a lot of the flows there relative to some of the more cyclical areas like financials and technology that have been in outflow. The other piece that I would mention, though, is the continued growth in fixed income and cash-like ETF product, which was another 50 billion in flows. And of that, about 25 or half of it, 25 billion of it was in ultra short ETFs. So I guess the short version of that is that, cash and fixed income, sort of plain vanilla yield oriented product, are really going to start to give more esoteric yield vehicles a run for their money as you continue to see rates creep up.
Well, that's actually sorry to jump in, but that's something that I've been thinking about a lot because I was looking at some of the ultra short duration cash-like ETFs, and they're actually starting to pay dividends, pennies, but something.
They are, and if you look at where we are today, right? So we're coming up on another Fed meeting in the end of July. Markets are pricing in a 75% probability of 75 basis points, and then if you fast forward to the end of the year, based on what is being priced in terms of Fed action, we could be at 3.5% just in a cash-like product. And then you go out the curve a little bit, you get more than that, right? That's pretty interesting. I would go as far as to say it's pretty sexy relative to, the liquid alts and the other esoteric products that people have been using to get yield. You may not need to do that if you can get it in vanilla fixed income.
So sexy because, at this point, we talk a lot about capital preservation, Stephanie, and that's really kind of what investors need to be thinking about.
That's exactly right. I think investors not only cyclically, Carol, but also demographically, right? The search for yield is not just because we haven't seen 3% on money markets or cash product in 10 years. It's also because we have an aging demographic in this country that need that more structurally for their lifestyles.
So give me an idea in terms of, Stephanie, in market cycles. We've talked about that it's typically about 8 months between when the Fed stops raising rates to when it starts to cut rates, which is a short period of time. Markets are forward-looking, right? I mean, what are you looking for when you get an idea that this maybe down market cycle, at least on the equity side of things, is coming to an end?
Yeah, look, I mean, sometimes we joke about the perspective any of us have on markets is probably worth the price of a cup of coffee. That being said, I think, our view is that, the real question is around inflation, Carol.
Yeah.
And that's really what the markets are focused on. That's what people are looking at in terms of earnings and multiples and what's really going to impact the equity markets as well as psychology, as well as whether people are, employed and continue to spend, right? So if the Fed strikes the right balance, where we know the Fed is behind the curve on inflation, if the Fed can strike the right balance, then I think you'll see markets stabilize.
Jay Powell thinks he can, right, Katie? We heard this from him today, but he's not. He thinks he can. So, Stephanie, how comfortable do you feel in an environment that we're coming off of that we've never lived through before, that you think the Fed can get it right? Because they are going to be aggressive. We know that.
They're definitely going to be aggressive. It's interesting. You may be familiar with our chief economist, Vincent Reinhart, who's a former Fed official, Fed watcher par excellence. And certainly, I think Vincent is talking about a fine balance here in terms of not turning this into a recession. But it's a very tricky balance given how behind the Fed has been on inflation. So look, they have to get it right for us to continue the upward trend that we've seen over many, many years in equity markets. But it's going to be a really interesting market to watch here for the next few months.
And I'd love to broaden this conversation out a little bit and talk about crypto. I know that you were on a really riveting panel with Carol in Dallas. I wasn't there, you guys, but
you should have been, because it was really smart. And so let's talk about, Stephanie, I loved it because we talked specifically about, what's the future of money. And we had Matt Walsh, founding partner at Castle Island Ventures. We had Matt Hogan as CIO at Bitwise. I mean, you guys really came at it from different perspectives. They are in on the crypto world, but said we were very early in. How do you guys at your company think about where you need to be in this space?
Sure. Well, from a broad perspective, BNY Mellon seeks to be a leader in the digital asset space. As you know, we're a leading custody bank. We're really in all parts of the cash ecosystem. And as our clients look to us for digital asset solutions as a place to keep their money or trade their money or manage their money, we want to be a leader there. So that's kind of the short answer. Now, what does that really look like? It's going to go in different stages, right? The regulators have a key role to play. And I think what we saw, Carol, after some of the crypto events and the dislocation that happened a few weeks ago, is that the regulators are going to come in and provide some standards, particularly as relates to the reserve management underneath some of these cryptocurrencies and stablecoins.
Which I felt like you guys all welcomed that idea, that we would get some regulatory oversight.
It has to happen. There was too much white space here, and I think that, plus, as the guys on the panel pointed out, there was a lot of leverage as well as just not a lot of regulation, and that created some of the outcomes that we have. I mean, the reality is, the reason people have confidence in traditional currencies is because there is a fully transparent, fully liquid, hard currency backing in reserve management in every central bank around the world. And that wasn't the case in stablecoin, and it needs to be.
Well, talking about crypto, talking about regulation, talking about ETFs, let's wrap it all together because there's a very important SEC decision coming on a grayscale application to convert their Bitcoin trust into an ETF. I gotta ask, I mean, is a spot physically backed Bitcoin ETF going to become a reality sometime soon?
Well, if you hadn't said soon, I probably would have said likely. I think the question is when, right? Clearly, investors love the wrapper that they're comfortable with, the liquidity, the transparency, the way it works in the pipes of every advisor and retail investor in this country. That's why this is so attractive. Having said that, as we just talked about, it remains the components I mentioned, right? Whether that's transparency, liquidity, reserve management. And until that's in place, I think you'll see this probably take a little bit of time. Doesn't mean it won't happen. I think the direction of travel is clear, that even beyond the underlying of that specific instance, the idea of blockchain and digital ledger is here to stay. It's just a question of when, not if.
All right, Stephanie, I'm so jealous I'm not in studio with you. You have to promise to come back when I am COVID clear. I mean, I'm negative, everybody, but they're just still quarantining me because I loved our conversation and I want to continue it with you. Stephanie Pierce, she's Chief Executive Officer of Dreyfus Mellon and ETFs over at BNY Mellon Investment Management, joining us in our interactive broker studio. I highly recommend you go back to the Insight 22 conversations and check out our panel, which was all about reimagining the future of money. All right, we've got just a few minutes left in today's trading session. We are bouncing around big time, but we're seeing now some gains move into the Dow and the NASDAQ. Coming up next, we'll be joined by our Bloomberg TV team for Beyond the Bell, live on Bloomberg Radio, TV, and YouTube. We're counting you down to the close.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick, Caroline Hyde, Taylor Riggs counting you down to the closing bell. Here to help take us beyond the bell. It's our global simulcast, joined right now by Carol Masser, Katie Greifeld in for Tim Stenovic. We welcome our audiences across Bloomberg Television, radio, as well as on YouTube. And Carol, I think we'd be remiss in not pointing out that for all the volume explosion that we saw last week because of the so-called rebalancing here, we are, at least here in the United States, headed towards a three-day weekend here, the end of the first half, of course, and the type of sentiment in this market is sort of also, I guess, being driven by the lack of participation.
Yeah, absolutely. And let's not forget, we're coming off a previous week where we saw a big bounce back. So investors may be just saying, I'm just going to hold back at this point. We're definitely seeing, as for fund flows, we just spoke with Stephanie Pierce over at BNY Mellon Investment Management, overseas ETFs. She's seeing fund flows into healthcare ETFs over something like financials and also short duration cash-like investments. So that's where money has been flowing as of late.
Yeah, very defensive tilt to where money is actually moving. But I got to say, on a day like today, I think it's absolutely perfect, almost poetic, that the S&P 500 looks like it is completely unchanged at the moment.
Yeah, flat. And NASDAQ flat. The only action really is in the Russell 2000, though, that's really feeling the pain trade today. On the upside, the Dow Jones Industrial Average. But this is a story where monetary policy really dominates once again.
I thought it was so interesting. We just had a conversation, of course, with Tom Kennedy over at JP Morgan. He said if having to choose outright, Romaine, it would be equities over high yield, but investment grade really starting to look attractive, and maybe the end of that TINA trade that we've often so talked about in the last decade.
Yeah, I mean, we talk about this market. Obviously, a lot of people focus on fundamentals, but it's going to be a few weeks before we get a clearer read on those fundamentals. So people looking at those technicals, you had an S&P 500 that towards the start of the session did drop below that key Fibonacci level that a lot of people had their eyes on. It oscillated between gains and losses for a good portion of the day. And as we wait for these numbers to settle, the S&P, at least right now, unofficially is down only about 3 points here. So less than 0.1% lower here on the day. That could shift as these numbers settle. Keep that in mind. The NASDAQ composite also, we'll just call it unchanged, down about 4 points. The Dow Jones Industrial Average, that is your standout on the day. It is higher by about 0.3%. And that's largely because some of the defensive names that are baked into that, like a Procter & Gamble and a McDonald's. Meanwhile, Russell 2000, which is chock full of names that, of course, have no E, a lot of cyclical names as well. That's finishing the day down more than 1% here on the day, down by 1.1%.
Yeah, if we felt more upbeat, we would think that the bank stocks would be moving to the upside. That's not what we got today. The KBW Bank Index down about 1%. You mentioned earnings remain, and JP Morgan will get those results 7 a.m. Wall Street time on July 14th, and we'll start to get a better indication of what's on the minds of CEOs, you guys.
In the meantime, Carol, we're still sort of getting a little bit of some insight here in some of the sector winners, the sector losers. In some ways, it feels a little bit defensive with hardware equipment, some of these household products, technology. Those sectors are up 0.9 to about 1.3% or so on the day. But a lot of the big story here is to the downside. You mentioned some of the financials, auto, semiconductors, and energy. And then it's sort of the classic risk-on trade that is really unwinding here. You're off on these sectors anywhere from about 2 to even 3.5%.
All right, so let's get to some of the specific gainers. I was a little worried whether or not these guys were going to hold on to it, but it looks like they did. General Mills, I think, Romaine, you talked about this. You know, these were some of the names, these consumer staples that we saw investors moving into it. General Mills was top in the S&P 500. It hit a record high in today's trade, up more than 6%, 6.3% at the close. Organic sales growth forecast topping estimates. It also gave a better than expected projection for the current year, saying price increases and easing supply chain disruptions will buoy sales. Stocks up more than 11% so far. If you buy a box of Cheerios on Amazon, about $6.99 for a 20-ounce box. I thought that
Why are you buying it on Amazon?
Well, I'm not. I'm actually getting it upstairs at the food court every morning.
Yeah.
I'm just saying. All right, another gainer is IDEX Laboratories. It's up about 2.5% in today's trade. $30 billion market cap. It was top in the S&P and NASDAQ 100. Trading in options of the company surging. I have to say, no real news. It does report on July 29th, but this was certainly a standout among the gainers. And then O'Reilly Automotive. It's about a $30 billion market cap, by the way. O'Reilly Automotive also top among the S&P 500 and NASDAQ 100. It was up about 1% in today's trading session. This stock got a new bull. D.A. Davidson analyst Michael Baker raising his rating to buy from neutral today, boosted his price target to 740 from 700. Stock closed at 637 and change, Katie.
All right, well, moving on to the decliners. You talked about this a little bit earlier, but I want to revisit Carnival because Morgan Stanley cut its price target by 46% to just $7 per share. Their bear case being $0 per share.
Ouch.
The rationale there is that Carnival could lose all of its value if there's another demand shock. Shares plunging by more than 14%. That is the worst performer in the S&P 500. Also want to talk about Bed Bath & Beyond. So much news. Headline crossing the terminal plunged 24% for its worst decline in a year. This is after the company announced a CEO switch minutes before yet another disappointing earnings report this morning. That, of course, it follows a downward spiral in sales. You definitely saw a big downward spiral in the stock today. And finally, NVIDIA, I want to end there. Really, chip stocks in general falling after Bank of America came out with some pretty harsh words on the sector.
Yeah.
They wrote that semi-downturns happen every 3 to 4 years. We could be due for another one. NVIDIA down almost 3%.
I just want to just real quickly go back to something, Carol, because you pointed out, Carol, that General Mills actually closed at a record high. I had to double check that. It's interesting. You had a day like today.
Did you not trust me?
Yeah, no. But you basically had two stocks out there right now that closed at 52-week highs or record highs. That includes General Mills. You had more than 200 stocks, though, out there, guys, that closed at 52-week lows. That gives you an idea of where we are right now.
You know, I'm kind of hurt.
Well, you know, it's double check everything.
Yeah.
Nice.
Trust but verify. Oh, wow, jinx.
Jinx.
Well done.
Yikes.
Let's have a little look at what's happening on the clarification extent of our risk tolerance, because let's go across asset. Let's go to our global macro movers. And let's look again at King Dollar. Don't have to double check this one, Romain. I can show it's up 0.5%, strengthening, as Taylor would like me to say about all things FX. But this is really about the dollar, the Swiss franc, the desire to get into a haven. Remember that GDP number looking ugly earlier, that really started to make people worry about the overall US economic picture for the first quarter. Backward looking, but still worse than people had estimated. We're seeing, therefore, the flight into the havens, euro weakening by 0.7% as we had, of course, Madame Lagarde with her own Francine Lacqua and Jay Powell taking to the stage to talk about how they're all trying to tackle inflation. Interestingly, some of the inflationary pressures coming from commodities dialing down a little bit today. If you're looking at oil, Brent crude lower by 2.3%, WTI crude off by more than 2%. Interesting, even as we had a relatively sort of bullish set of the data showing that inventory levels were pretty low, the stockpiles pretty low for oil, but then Romain, as you pointed out, commodities close at 230. It is about the gasoline. It is about a demand strike, basically, buyer's strike, because gasoline prices are so high. People are not using it to the same extent. Gas oil is falling today, but gasoline on the downside. Overall, we also see a story of actually flight to a haven in the bond market, was it? In Europe, we're seeing the yields crushed in Greece by 21 basis points, in Switzerland off by 14 basis points on the 10-year, and indeed in France, money flowing into the 5-year, 13 basis points lower, Taylor.
In full faith and credit here, Caroline, yields firmly lower. And I sort of can't understand the grasp of this when you're falling on yields 5 to maybe 9 basis points or so across the curve. Is this lower growth, Carol? Is this lower inflation expectations? You had a 10-year that peaked almost at 350. We've unwinded some of that. We're down below a 310. And I don't know if it's just a classic safe haven trade or what.
I think the markets don't know exactly what's next. And we're looking at some of these data points. I'm curious about the inflation print tomorrow, Katie, and what that says and what that does to me. You know, I'm going to be watching the bond market very closely to see what kind of reaction it does it buy it if maybe it comes in hot and does things kind of flip around?
And, something I've been thinking about today is we sort of try to dissect what this pretty sideways trade in the S&P 500 is telling us. It really caught my eye. A note from Neil Dutta. He is at Renaissance Macro Research. He's been the ever optimist, but real sea change in his note today, saying that he's turned cautious on the economic outlook. You pair that with another read spec on the terminal today that you had Wall Street veteran George Ball saying that he expects the S&P 500 to bottom at 3,100. A lot of worried noises coming out of the street.
Yeah, we're going to hear from Cam Harvey a little bit later here on Bloomberg Television. I thought it was interesting, too. I mean, when you look at valuations, say, on like the NASDAQ 100, where you have a PE that's dropped down to about 20 from whatever it was above 30 just a few months ago here. The big question is, does that sort of mean there are bargains out there to be had? Well, yes, if you anticipate that earnings are going to continue to grow. And then we had J.P. Morgan, at least the analyst one particular analyst over there, coming out and actually lowering his earnings estimates for 26 different companies, including some of the big heavyweights, saying that E isn't going to hold up, at least not in the short term. And maybe that means you have lower to go here in aggregate on the market.
And it's interesting, just the cross-asset moves and some of the worries that you're really seeing evidence in the credit markets. Taylor, you've been saying it time and time again, but whether or not we're starting to see companies the amount of European bond sales that have been stalled because they do not want to be selling into this sort of a market, the M&A that's getting put on ice because you do not want to be selling debt into this market. This is when the financial conditions just really start to take a hit on the rest of the economy.
So the back and forth that we've just had in this discussion explains why we've had the back and forth on the markets, right? No real direction because people are trying to kind of reading it by, each story that comes out that's either positive, negative, like that's just kind of ruling the trade here.
And then the question is, what's the catalyst, right? I mean, still several weeks away from another Fed meeting, still a few weeks away from the meat of the earnings season.
Yep.
I mean, what happens in between?
Yeah.
Summer.
July 4th, remains.
Yeah, it's going to cost you more too at that July 4th picnic. I'm just going to tell you.
It's going to be great. Shaka Khan's going to be there. We're personal
Who doesn't want to see
Heather
I feel
Headley,
for you.
the Maestro, the whole Boston Pops orchestra. It's great. I mean, you got to watch this thing.
8 p.m. Monday.
It's a fun thing. All right, we're going to run, guys. That's going to do it for our cross-platform coverage on radio, TV, and YouTube. We call it Beyond the Bell. We'll be seeing you again, same time, same place, tomorrow.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
I don't know about you, Katie, but I'm pretty sure that Romain's going to get on the company jet to go down to Boston.
I'm so excited. Go up to Boston, geography. But I'm so excited that he's so excited.
It's a fun event. I've done it, like with Alex Steele for 3 years. We did it. And it's really a wonderful event. And there's nothing like a Boston crowd. And they just have these wonderful traditions. The music is incredible. The pops are fun. You sing with the crowd. And I have to say,
Sounds
I don't
like
know.
you miss it.
You get really, emotional about the country. All right, speaking of the country, lots of news going on. Let's go over to Nancy Lyons in D.C. Hey, Nance.
Thanks, Carol. NATO has agreed to the biggest upgrade of its military presence in Europe since the end of the Cold War, redrawing the continent's security in response to Russia's invasion of Ukraine. John Kirby, the National Security Council coordinator for strategic communications, says there's no reason Russian President Vladimir Putin should view the bolstering of forces in NATO's eastern flank as a provocation.
There's no reason that Mr. Putin needs to view any force posture changes on NATO's eastern flank as a provocation. NATO is, will be, always has been a defensive alliance. The reason we have to do this is because Mr. Putin has been the destabilizing influence on the continent.
John Kirby spoke with Bloomberg's Anne-Marie Hordern in Madrid. Finland and Sweden have also been formally invited to join the NATO alliance.
I believe I can fly.
R&B star R. Kelly has been sentenced to 30 years in prison for using his superstardom to subject young fans, some of them children, to systemic sexual abuse. The 55-year-old was convicted of racketeering and sex trafficking last year. The judge in the case imposed the sentence after hearing from several survivors who attested to how Kelly's abuse affected their lives. The nation's last living Medal of Honor recipient from World War II has died. Herschel Woody Williams was 98 when he died at the VA Medical Center in West Virginia that bears his name. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nancy Lyons, thank you so much. Nancy Lyons in our D.C. newsroom. So this story getting a read spike on the Bloomberg, and we're talking about Wells Fargo. And Katie, Wells Fargo should face an investigation by U.S. regulators into allegations that the bank denied Black refinancing applicants and hosted mock interviews to fulfill diversity numbers. This is something Bloomberg has reported on. This is according to Congresswoman Maxine Waters.
Yeah, she wrote in a letter to regulators, Wells Fargo continues to display a troubling pattern of bad behavior with an inability to competently redress such patterns. Of course, the New York Times already reported that the bank is already the target of a criminal investigation by the Manhattan U.S. Attorney's Office. So, man, just a lot of news coming for Wells Fargo.
Yeah, I mean, this is a bank, right, for the last how many years, pre-pandemic, right, has gone, kind of one controversy after another. And this one has to be specifically when it comes to diversity and inclusion in terms of its business practices. The bank already the target of a criminal investigation, as you said, by the Manhattan U.S. Attorney's Office. This is what you said the Times has reported. Current and former bank employees said supervisors in the wealth management division had instructed them to interview Black and female candidates for positions that had already been promised to someone else. That's what the newspaper reported back in May. I mean, this again gets to internal practices at the bank. For such a long time, the leader of the CEOs have been folks that have been brought up throughout the ranks and longtime Wells Fargo. Right now, the bank is run by, an outsider. It's Charlie Scharf. He used to be at BNY Mellon, and so he's been looking to right the shift. But again, its practices continue to be called into question.
Yeah, and we did hear from Scharf earlier this month. He said that the firm had temporarily halted the use of diversity guidelines for hiring. The pause will be several weeks. That's what Scharf wrote in a memo.
Yeah, a series of scandals, regulatory issues for years. I mean, this has been the thing, is that they just can't seem to get out from under. It's been operating under a growth cap imposed by the Federal Reserve. Stock, by the way, down about 17% so far this year. All right, you're listening to Bloomberg Radio.
stories, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pella. We've got the Dow higher, S&P, NASDAQ both declined today. Choppy sessions, stocks struggling to find direction. Traders were assessing comments from central bank chiefs about the outlook for the economy and interest rates. 10-year yield, 3.09%. 10-year today up 20-30 seconds. S&P ended the day lower. Little change, down 2 points, down less than 0.1%. The Dow up 82, holding on to a gain of 0.3% at the close. NASDAQ down 3. NASDAQ Composite Index down less than 0.1%. Spot gold at $18.18 the ounce, down by about 0.1%. West Texas Intermediate crude down 2%, $109.49 a barrel. Again, recapping, stocks finish mixed. S&P down 2 points, down by about 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, in a month where the nation has been highlighting the importance of equality in our world on all levels, we too have been continuing to shed some light on what's been done, what needs to be done when it comes to true diversity and inclusivity in our world. So today we welcome Margot Conrose. She's Chief Marketing Officer of Commerce at the intelligent marketing platform Sky. She joins us on the phone from Chicago. Margot, good to have you here with Katie and myself. So I want to ask you, when we talk about intelligent marketing, I like to think I'm intelligent, but then that's highly subjective. So what does it really mean when someone is an intelligent marketing firm?
Hi, thank you so much for having me. It's a great question. For us, intelligence really comes down to what's informing your decisions. What's the data that you're looking at that is helping to then, create insights from which you can make decisions about how best to go to market, how to connect with your customers, how to optimize the mix of channels and publishers that you're using to reach them. Not all data and insights are created equal when it comes to marketing. Not all media is created equal. So being an intelligent marketer is really understanding, kind of how to separate signal from noise, how to leverage what's out there, and also not be blinded to any real stories by what data is telling you. It's a bit of an art and a science.
And so I'm curious, obviously it's June, it's Pride Month. It feels like almost every brand under the sun has rolled out some sort of campaign connected to Pride Month. But what does the platform say and the data say about how brands can actually connect with the LGBTQ plus community beyond just, rolling out a rainbow?
Yeah, I actually think when it comes to things like Pride Month and how companies, how brands that are, kind of commercial enterprises can partake and show support and allyship without, making it about them, that boils down to not just data, but real, listening to people, right? That's where, really a lot of intelligence goes into the planning, into, deep inside work, looking inward and listening to leveraging voices that are part of the LGBTQIA plus community want before they make a decision. And that's where we're really starting to see today the difference between good activations, good executions, good celebrations of Pride Month from brands and failures, real flops that, kind of backfire in a very material kind of way.
All right, so greenwashing, rainbow washing, right? We want to get away from this where, somebody just does a great talk but doesn't necessarily walk that talk. So is there companies out there or a brand where you're spot on, this makes sense?
Yeah. I think, first of all, there's been a movement against rainbow washing that is not one size fits all. Older generations, particularly consumers who might have faced extreme times of discrimination as part of this community, they're not so against it. They're kind of like, okay, recognition is something, that's progress. But younger generations, as you kind of go younger and younger, particularly when you get to Gen Z, they want action. They really are sort of like, if you're not doing the actual work, if you're just trying to, kind of capitalize, they're cynical about that and they want to see some action. So companies that are doing a really good job are the ones that are using their offering and also their platform and their resources to, for example, break down stereotypes or bring light to discrimination that this community faces, and connecting that to something about their product and offering. So, for example, Gymshark, a fitness apparel brand, their campaign this year is about telling stories of LGBTQIA plus athletes to try to attack the stereotypes that fitness environments can often perpetuate, being kind of exclusionary, uninviting, full of stigmas. So instead, they're trying to celebrate athletes who fit in this community and celebrate the individuality that should go into a fitness journey, instead of saying, kind of fitness and gyms look like this. So they're taking a specific area of discomfort, of marginalization, and they're saying, this is something that we have a connection to as a brand,
right?
And therefore, our marketing activation is going to address that thing. It's not general, which I think is key to success here.
Well, let's talk about the key to failure then, the sort of the opposite question. I mean, what would be something that wouldn't sing coming from a brand?
So a couple of things. Consumers hate when companies feel like they're capitalizing on another group's marginalization. So anything that kind of shows quote unquote support but doesn't have any real substance behind it is going to be, at a minimum, not really celebrated. But then when you get to a place where, there's actual disparity between the statement that you're making during Pride Month and, your internal policies, or your political leanings as a company, giving money to, let's say, politicians who are advancing anti-trans or gay legislations and policies and things like that, those kinds of, areas of discrepancy or even hypocrisy are going to really come to light very quickly. So, at a minimum, don't do anything if it's not true at all, if it's not true and real. But then there's cases where I think companies they're just making it way too light. They're not taking into account the fact that, yes, Pride is a celebration and it's become very celebratory, but the roots are quite serious. They're about challenges, they're about pain, they're about personal, personal stories.
Yeah. There's some really specific.
Yeah,
I feel like we're seeing this in the investment world too when it comes to the ESG space, that there's companies being targeted where they want transparency, want to understand investors, want to make sure it's really true and clear. Margot Conrose is Chief Marketing Officer of Commerce at Sky, joining us on the phone from Chicago. Coming up, we have the author of a really great book.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, going to tell you the truth here. Not that I don't always tell you the truth, but I have been so excited about our next guest. I always tell the truth, but I'm really excited about our next guest. He's written a book. It's called The Man Who Broke Capitalism, How Jack Welch Gutted the Heartland, Crushed the Soul of Corporate America, and How to Undo His Legacy. This is someone so revered for so long until he wasn't.
The first celebrity CEO, you could venture.
Absolutely. All right, we're going to get into it with the author, David Gellis, in just a moment. First up, though, back to Charlie Pellet with a check on that trading day. Hey, Charlie.
Well, hello there. Turned out to be a mixed finish seesaw session today. Stocks struggled to find direction, Carol, with the S&P ending the day down 2 points, down less than 0.1%. Dow Industrials up 82, gain there of 0.3%. And NASDAQ today down 3 points, drop there of less than 0.1%. Key takeaway, those stocks did swing between gains and losses for all of the session. 10-year up 21.30 seconds. The 10-year yield 3.09%. Spot gold down $1.50 the ounce to 18.18. Drop there of 0.1%. West Texas Intermediate crude down 2%, 109.48 a barrel. Well, as for the Federal Reserve and the outlook there, Stephanie Pierce is the CEO of Dreyfus Mellon and ETFs for BNY Mellon Investment Management, and she was our guest right here on Bloomberg Business Week.
So we're coming up on another Fed meeting in the end of July. Markets are pricing in a 75% probability of 75 basis points. And then if you fast forward to the end of the year, based on what is being priced in terms of Fed action, we could be at 3.5% just in a cash-like product. And then you go out the curve a little bit, you'll get more than that.
Investors betting that Bed Bath & Beyond would be the next meme stock to go to the moon are facing the harsh reality that fundamentals are particularly important. During a market rout today, we saw Bed Bath & Beyond plunge 23.5% after the company reported disappointing earnings. It follows a tumultuous two-year stretch when the company captivated retail traders alongside stocks like GameStop and AMC Entertainment Holdings. GameStop today down 1.2%, AMC up by 2%. Recapping, stocks mixed. S&P down 2 points, lower today by 0.1%. General Electric shares down by 3.3%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, the manager of the century, Fortune called him upon his retirement. Others referred to him as a rock star CEO, a champion of Six Sigma and Stack rankings. His name became synonymous with consistent and predictable earnings growth and shareholder gains as well, and with M&A, job cuts, offshoring, and outsourcing. We are talking about the man who broke capitalism, or at least that's what a new book calls Jack Welch. Joining us is David Gellis, corner office columnist and award-winning business reporter for the New York Times, author of The Man Who Broke Capitalism, How Jack Welch Gutted the Heartland and Crushed the Soul of Corporate America, and How to Undo His Legacy. David joins us via Zoom in Canada. David, I'm delighted. We've been looking forward to talking with you. This book, would you have written it if Jack Welch was still alive?
Absolutely. It was, sheer timing that he sadly passed away in March 2020, really the week that the pandemic sort of took over in the United States. And that was really the week that helped me realize I needed to write this book. That was my last week of reporting on the Boeing story, which we can talk about in some more detail. But absolutely, I wish I had the chance to talk to him about all this because, listen, we know a whole lot about this man, and we know he would have engaged fully in this debate. And it's regretful, frankly, that I wasn't able to, try, at least seek out his perspective on all these issues and more.
How did he become someone who was so revered? I've reported on so many GE quarters and on the company over my tenure as a business journalist. I mean, how did he go from being somebody who was, as we said, the manager of the century, and we lauded him for his consistency, to someone who we realized, was doing some financial engineering?
Well, I think that evolution of how we think about him is still very much underway. There are still people who vehemently dispute with my characterization of him. In many corners of the business world, he is still a hero. And that's part of the debate I wanted to stir up, not just a referendum on Welch himself, but a broader conversation about what we admire, what we look up to the kind of business leaders we want to be putting up on those pedestals. So listen, Welch himself had ups and downs during his tenure. We have to remember, shortly after taking over, he wasn't called the manager of the century. He was called Neutron Jack because everyone was so upset with his mass layoffs and factory closures. But over the course of his 20 years as CEO, he was able to repair that initial damage to his reputation and go out from the company on top. So this, process of thinking about the legacy of a man so consequential, I don't know that it's ever over. And what I'm trying to do with this book is put his tenure in perspective, yes, but also make it a conversation, I hope, about more than just one man, but about a system. And it's a system that I don't need to tell you both has created all sorts of bizarre negative externalities and strange consequences and inequalities that we as a society are still wrestling with every day.
Well, David, talk more about that system and, Welch's role in it. I mean, how do we go from the manager of the century into, as you say, the man who broke capitalism?
I think the story for me really begins in the post-war years, actually. That was what some people call the golden age of capitalism. And it was so fun to hear just GE's stock, mentioned in the ticker right before this segment, because GE, it's a reminder, has been this influential bellwether bedrock corporation for more than a century. But back then, in the late 40s, the 50s, the 60s, the way GE treated its employees, the way IBM and Johnson & Johnson treated their frontline employees was just fundamentally different than the way we think about major multinational corporations treating most of their employees today. Which is to say, back then, in this golden age of capitalism, companies and CEOs were excited about paying people better and better wages. They were eager to share the wealth that they were creating with their employees, with their suppliers, and even with the government. In the book, I cite the 1953 GE annual report, where the company boasts about paying so many taxes. That's a world away from where we are today. And part of the way, a big part of the way we got there was through the way Welch changed GE. Upon taking over GE in 1981, everything I just described basically went out the window. And Welch brought to the job this maniacal focus on increasing shareholder value and on making GE the most valuable company in the world. And we can talk about the ways in which he did it, but it's that change in perspective that has gotten us from there to here.
We're going to get into more. He did take the company from $14 billion to $600 billion. It did make it the world's most valuable company. But we know that in years later, a lot came out in terms of GE Capital and the role in all of that. So we're going to continue with David Gellis. He's the man. He's not the man, but he wrote the book called The Man Who Broke Capitalism. It's all about Jack Welch. We'll continue this conversation in just a moment. Right now, though, we do want to get another check on world and national news. For that, back to Nancy Lyons. She's in D.C. Hey, Nance.
Thanks, Carol. Supreme Court Justice Stephen Breyer has informed President Biden he will retire from the High Court at noon Wall Street time tomorrow. Breyer announced his move earlier this year, giving a nod to our democracy.
Of course, people don't agree, but we have a country that is based on human rights, democracy, and so forth. But I'll tell you what Lincoln thought, what Washington thought, and what people today still think. It's an experiment.
Justice Breyer's seat on the Supreme Court bench will be filled by the court's newest member, Justice Ketanji Brown Jackson. The number of dead rose to 53 today in the case of the stifling trailer that was discovered abandoned in sweltering heat in San Antonio, Texas Monday. 40 of the victims were said to be male, 13 female. Texas has seen a surge in immigration. Well, NATO has declared Russia the, quote, most significant and direct threat, unquote, to the peace and security of its members. It's an about-face for an organization that once called Moscow a strategic partner. The alliance today also vowed to strengthen support for Ukraine. President Biden says he's worried about missile testing in North Korea. He spoke to reporters at the start of a trilateral meeting with Japan and South Korea on the sidelines of the NATO summit.
We remain deeply concerned that DPRK's continued escalatory ballistic missiles and tests and potential for to conduct a nuclear test.
Biden says the meeting with Japan and South Korea was an opportunity for the leaders to coordinate a shared response. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Carol Master, Katie Greifeld here on Bloomberg Business Week, and we're talking with David Gellis, New York Times reporter. His new book, The Man Who Broke Capitalism, How Jack Welch Gutted the Heartland, Crushed the Soul of Corporate America, and How to Undo His Legacy. David, we just have about a minute and a half, and then we'll come back and talk some more. But one of the things that Jack Welch changed in a very dramatic way was executive compensation, especially when you leave the CEO's office. Just again, we've got about a minute or so. Talk to us about that.
His predecessor at GE, Reg Jones, I forget the exact number, but he was making something close to $1 million a year. That was about 13 times as much as the median employee at GE at the time. Under Welch, CEO compensation began to go upwards, and it really hasn't stopped since then. Just from his work being a manager alone. Let's remember, Welch was not an inventor. He was not an entrepreneur. He was a people manager. He amassed nearly $1 billion during his tenure, making the list of the Forbes 400 at the time. And when he retired, his exit package was worth some $417 million. Look at the headlines today. That began under Welch. He was a main progenitor of these outsized executive compensation packages, and it really has not stopped to this day. And lots of research demonstrates that it is CEO compensation in particular, executive compensation, that is one of the main drivers of income inequality broadly in this country.
Yeah, and what's interesting too is, and I feel like the connection between shareholder performance and that was like an okay sign off on executive compensation that just rose to unbelievable highs certainly was something you saw under Jack Welch's reign. We're going to continue with David Gellis and his book, The Man Who Broke Capitalism. We'll get back to that in just a moment. I want to get into a little bit about how Jack Welch and his proteges and how that maybe led to some of the problems at Boeing. So we'll get to that in just a moment. Carol Master, Katie Greifeld, you are listening and watching Bloomberg Business Week, and this is Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We're keeping an eye on shares of RH after hours. They are now down by 7.7% after the luxury furniture maker cut its revenue forecast for the year, citing lower than expected demand. It was a tough day for another prominent retailer, Bed Bath & Beyond. Its shares plunged today by 23.6%. The U.S. stock market had a tough time finding direction today. Traders were assessing comments from central bank chiefs about the outlook for the economy and interest rates. The S&P fell 2 points, down by about 0.1%. The Dow up 82, higher by 0.3%. NASDAQ lower by 3, down less than 0.1%. 10-year up 22.30 seconds. 10-year yield 3.08%. Spot gold down 0.1%, 18.18 the ounce. West Texas Intermediate crude oil down 2%, 109.48 a barrel. Bitcoin down 0.6%, 20,124 on Bitcoin. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. I want to get back to David Gelles, New York Times reporter, author of a new book, The Man Who Broke Capitalism, How Jack Welch Gutted the Heartland and Crushed the Soul of Corporate America, and How to Undo His Legacy. Quite a turnaround who, for a CEO for many years, was really lauded and respected and imitated, if you will. And he really did spawn a bunch of executives, former GE executives, who went off to lead other companies, although a lot of them, David, didn't do so well. Are we not surprised because a lot of these executives, first of all, didn't have a GE capital at their beck and call?
Yeah, well, I got to believe that the boards who hired them were surprised. But it's absolutely true. There was really no CEO factory like GE. Fortune One wrote that when the Army needs a general, it goes to West Point, and when a company needs a CEO, it goes to GE. And that speaks to not only Welch, but 100 years, really, when GE was revered as sort of the company that set the bar for corporate America. And that continued under Welch. There was a moment in the years just after he retired where there were literally dozens of his proteges running major American corporations.
And I'm curious what the reception to this book has been, because, you know, some pretty harsh words in there. I mean, have you heard from GE? Have you even heard from, you know, Welch's family, for example?
Well, Jeff Immelt, Jack Welch's chosen successor, of course, who I interviewed for this book, he posted a response on LinkedIn, which I would welcome people take a look at, and I wrote a fulsome response back. And so that exchange is really, you know, to me, a recognition that even someone like Immelt is willing to engage in a debate about the real legacy of Welch. And that to me speaks to this broader recognition that men like Welch are really consequential. There are these individuals that sort of serve as inflection points.
Was Immelt defensive of Welch? Just quickly, if you could just tell us how he responded.
Yeah, Jeff Immelt, who of course ran GE for the 16 years after Jack, took to LinkedIn and wrote a piece. I think the title was, you know, Jack was pretty damn good, or something to that effect. And it was largely a defense of Welch as a manager. Now, my response to Immelt was to essentially look at the way Immelt described Welch in Immelt's own book, which came out last year, in which, I'm sorry, I don't know what words I can use on the radio here. I'll try to be judicious, but Jeff Immelt says that Jack Welch left him a bag of blank. And
and it's interesting because Welch was critical, right? The first earnings after he was gone and GE missed a quarterly earnings, Welch was critical.
that was during the financial crisis, and what you just said was an understatement. He said, if Jeff missed again, he would get out a gun and shoot him, which was the way that was the verb Welch used to describe firing people.
So one thing I'm curious about, and you get very much into GE Capital, and again, that was another thing that we said, oh, how great, they've got this finance arm. GE, they're into all these things. They're a microcosm of the economy, but they were actually overexposed to financial. But that, you know, and some of what we're talking about is not new. Like, I think about people who came on and were critical of GE and its consistency and were suspect. You know, there were those certainly naysayers that were out there. When we look back, Should somebody have been held accountable? I mean, they did pay some fines, correct? SEC fines later on in terms of, I believe, their accounting. I'm not sure if I'm saying it exactly correctly, but should people have been held accountable for what they were doing, or what they were doing was legal but maybe a little squishy?
Well, a lot in there. It's not my job to say how and when we hold executives accountable. And I think it's also important to point out that during the 80s and 90s, there was just much less transparency than there is today. You know, Sarbanes-Oxley was passed after Jack Welch retired. What happened, though, is right after he retired, Bill Gross, who, of course, Mary Childs just wrote a great book about, was among the first to say, you know, this 80 quarters in a row of meeting or beating analyst expectations, like, that doesn't happen naturally. Something is going on here. And then it was several years after that, as you referenced, that under Immelt, GE settled sweeping accounting fraud charges with the SEC that pointed to years and years of impropriety in terms of how they manage the books, how they manage their earnings. So listen, I don't think we can ever know exactly what was going on there, but what is clear, and what Welch's own deputies said on the record then and even to this day, was that GE Capital was the key that let the company, let the parent corporation meet or beat those analyst expectations quarter after quarter in this most unnatural way. And that they did it with a flurry, you know, within the last week or two of a quarter, just fine-tuning exactly whatever numbers they wanted to, you know, hit the number that they thought the street wanted to see.
And David, I want to talk about the end of the title, how to undo his legacy. Walk us through that.
Well, it's not easy. Listen, we're in a moment, and I've covered CEOs for the last decade or so. You all know this. There's a different ethos in business today. CEOs are talking about their responsibilities and who they serve in new ways. You know, call it stakeholder capitalism, call it CSR, ESG, whatever you want. There's, I think, a broad recognition from companies, from CEOs, from the business roundtable, that this era of shareholder primacy has probably run its course, and that it's time to start considering a whole much broader group of stakeholders. Now, that's easy to say. In practice, it's super hard to do. In the book, listen, I point out some examples of companies that are maybe putting profits, you know, letting them take a back seat in small ways. I call for a laundry list of policy solutions that might gradually start to point us in the right direction. But listen, the last couple years have been a test case. They've been the moment where CEOs, businesses could either step up in the midst of a pandemic, in the midst of now, or, you know, potential another recession, and demonstrate they were going to be serious about this, make good on these lofty commitments. I have yet to see it really happen.
Any lessons learned? We only have about 30 seconds. You have to be quick. Lessons learned, corporate America, SEC, shareholders, analysts, as a result of the Welch era and impact, and just very quickly.
I think that there's a recognition that it works until it doesn't. And if you even talk to boards and CEOs, they understand that if you put someone who's going to follow the Welch playbook and downsize and do a bunch of deals and look for quick earnings, it might work for a couple months, maybe a couple quarters, maybe a couple years, but that kind of strategy just doesn't work in the long term. You got to invest in your people. You got to invest in R&D. You got to make good, reliable products and services. That's the way to make an enduring business in this country.
We didn't get to talk Boeing, so I highly recommend that everybody check out the book, because the GE Boeing connection, of course, many executives who ended up there and then getting to the 737 MAX. It's really interesting to read about. David Gellis, good luck with the book, New York Times reporter. And the book is The Man Who Broke Capitalism, How Jack Welch Gutted the Heartland and Crushed the Soul of Corporate America, and How to Undo His Legacy. And David giving us some thoughts about undoing his legacy at the end. All right, coming up next, Sound On with Jude Grasso. So check it out for the whole Bloomberg Business Week team. I'm Carol Massar. Have a good and safe evening. You're listening and watching Bloomberg Business Week.